Thank you, Edward, for the news update. Welcome to the chamber here live on NewDay. And this morning we are continuing that discussion that we had yesterday about taxes. Basically, the kind of taxes you're entitled, tax reliefs that you're entitled to as an individual, and also the process of going about how to file for those reliefs. Now, tax reliefs are intended to lessen the burden on taxpayers, but unfortunately here in Ghana, a lot of people do not know what kind of tax reliefs they're entitled to, or even the process of going about how to file for these tax reliefs. Fortunately, our expert tax attorney, William Kofi Owusu-Demitia, is back again this morning to educate us some more. Good morning, and thank you for making the time to come back today.
It's a pleasure.
Right, so yesterday we talked about the tax reliefs that are individuals or private persons are entitled to. This morning we'd like to look at the tax incentives that are meant for businesses. So if you can just take it from there.
Okay, thank you very much. Good morning to your viewers. Basically, under the income tax law of Ghana, we can classify tax incentives for businesses into two main categories. We have what we call industry concessions and location savings. And so we'll be looking at it under these broad headings. Under industry concession, basically they are found under Section 11 of the Internal Revenue Act of 2000 at 592. And under that, you would realize that there are certain industries that are giving incentives by way of exemption from paying corporate income tax for a number of years.
Okay.
So, for example,
what are some of these industries?
Yeah, so people engage in farming business. Farming business is just a business of producing crops, livestock or fish. And if you are into tree crop farming, you are giving a tax exemption for 10 years from paying corporate income tax from the time you first harvest your crops. And so tree crops are defined to include coconut, shea nut, oil palm, and some others, rubber, and some others. So if you are into that particular industry, until you get your first harvest, normally you will not be making income. But even after making your first harvest, you have 10 years within which you are not supposed to pay any taxes.
Okay, does it matter the size of your farm or your business?
No, it doesn't matter. The Act just says that farming business, and then it specifies tree crop farming. Okay. So far as you have it, if you are into that business, because business is defined in the Act to mean a trade, a profession or vocation. If that is the main source of income or the main source of activity, economic activity you undertake, you are entitled to that particular relief for 10 years after your first harvest.
And then after the 10 years, what happened? Is it renewable?
Yeah, after the first 10 years, the rate goes up, but it goes up marginally. It doesn't go up to the 25% because averagely the corporate income tax in Ghana for most businesses is 25%, except mining, which is about 35%, hotels about 20%, and others.
So for the first 10 years, you're exempted completely?
Yes, from paying income taxes. And apart from that, if you are into the business of farming for life, you going into maybe cocoa, substandard cocoa, for example. If you're into substandard cocoa and then you make cocoa byproducts out of that, the law says that it will give you 7 years tax holiday, and you don't pay taxes during that period. If you are into general agro-processing, normally it's 3 years. But if you establish the agro-processing business after 1st January 2004, it's 5 years.
Okay, so these raw materials that you're talking about, is it just limited to the agro-processing sector?
Yes, it's limited to agriculture. So, for instance, if you turn any of the things we've mentioned, any of the agricultural things, products that we've mentioned, maize, cassava, all that, if you turn them or you process them in a state, either semi-finished or finished product, in cans or other packaging, then you are entitled to this relief.
7 years?
Yes, 7 years. That's for cocoa. Those who are dealing in cocoa byproducts from cocoa substandard. Generally, it's 3 years. But if you establish the agro-processing business after 1st January 2004, you are entitled to a 5-year holiday. And apart from that, companies engage in processing polythene, plastic, for either agricultural or commercial purposes are entitled to a tax holiday as well. And so you realize that government realizes that there's a lot of littering around. And so let's encourage people to turn all the litter into something productive. And so you see that government is achieving or using the tax law to achieve a particular objective. the environmental degradation and all that. We are trying to make other uses out of it, and we are using the tax law as a medium or a vehicle to achieve that.
Why is there a time limit on all of these things? I mean, for as long as you continue to work in this sector or industry, why can't you have, I mean, an unlimited amount of years or whatever?
Because if we do that, government runs the risk of losing so much revenue, because it's huge tax concession. If you are paying 25% every year, and government is saying for 10 years or for 5 years do not pay tax, you can imagine the amount of revenue. So just
basically to help you get on your feet in the first few years of business.
Yes, so such an venture may not be enticing to people, and maybe the capital outlay might be a bit high. So government is saying, okay, we understand the situation, but we'll help you up on your feet. And governments all over the world do that, no matter where. Even in the US, the advanced state of US, they even give subsidies to farmers. They give subsidies to startups so that people can go into particular areas that would engender growth in the economy. So you find out that under our tax law, government is trying to achieve something of that sort. So that's under agro-processing. For example, if companies finance venture capital companies, they're also giving 10 years holiday within which they don't pay tax. A rural bank, for instance, does not pay tax for the first 10 years.
Only rural banks?
Yes, rural banks and Apex banks. So for the commercial ones, they have enough capital outlay to be able to go out and get and do their business. So there's really no motivation to have a tax policy geared at them to enable them. But the idea is that we want financial inclusion.
Okay. A lot of people all these small banks and financial institutions,
who are in the rural areas where people don't know the culture of savings, they want to put the money under their beds. Government is saying, okay, if you go out there, you're able to mobilize funds for them so that you can on-lend to people who need them. Because the basic role of finance is what we call financial intermediation. You pick from those who have excess and give to those who do not have. That is the role of financial institutions, basically financial intermediation. So if we can go to the rural areas and get people to have that sense of saving, then we will give you some holiday so that you'll be able to thrive. So that, and also companies that are engaged in low-cost, affordable housing for residential
low
people.
Cost, that's a keyword.
Yes, in order to prevent abuse, the act says that you have to go to the Ministry of Works and Housing. And example, is not taxable. So whatever he earns from cocoa, because cocoa is a major exporter, so we encourage people to go into cocoa and then do that. So basically under Section 11, you realize that the government tries to give certain industries, key specific industries, certain concessions so that they can do well, so that they can flourish in that particular area. So you would find that in our law, that is what we give industries in that particular sector, as I've mentioned.
Okay. Are there any other sectors that we haven't touched on that are also benefiting from tax
sectors? Basically, no. But under the Free Zones Act, for example, if you establish a company in the Free Zones Act, under the Free Zones Enclave or a Free Zone Enterprise, the idea is that they are basically there to manufacture for export, to earn Ghana foreign exchange. Our going to the IMF is just because we have a balance of payment problem. We don't have enough foreign exchange to meet our imports. And so government is saying that, okay, we are creating a free zones enterprise or idea. You can manufacture and export up to 70% of your produce. When you do that, we earn foreign exchange. It helps solve our balance of payment problem. So we will give you a tax holiday of 10 years. After that, your corporate income tax should not rise more than 8%. I know there are proposals to increase it to 15%. But then that is what the law says. For instance, if you're under that, and the GIPC too, there are certain tax reliefs that companies enjoy. So these are the industry concessions basically that are found under our tax laws.
Okay.
But when we go to location savings, it basically looks at where the company or where the particular industry is located. So manufacturing as well. You realize that Ghana, almost all of our exports are in the raw form. The idea is that government wants to encourage people to go into the manufacturing sector to add value, because if you add value to the raw state, it's able to increase the how much it can fetch for and earn us so much, and then we don't have to be importing everything to Ghana. So if you're a manufacturing company and you are not into agro processing and you are located in Accra and Tema, your corporate income tax is 25%. There is no incentive because Accra and Tema are saturated with manufacturing companies. However, if you are located in other regional capitals, so for instance, if you go to the eastern region, you are in Koforidua. If you go to the Ashanti region, you are in Kumasi. If you go to northern region, you are in Tamale. The tax law says that it will give you tax incentive of up to 25% of your corporate income tax you would have paid. So effectively, you are paying corporate income tax of 18.75% as opposed to
the
25% of your corporate income tax.
So it's not a complete exemption.
It's not complete, but it's an incentive more to encourage people to go outside Accra and Tema so that there can be industries outside. The idea is that if there are industries outside Accra and Tema, it will create jobs. People will be able to get money. They can pay their taxes. Government can have enough to be able to construct roads and other social amenities. So it's a spillover effect. The idea is that there should be development across the length and breadth of Ghana, not just concentrated in Accra and Tema. That is why that concession is given. And if you are not located in the regional capital, so you could be in a town in another region, so maybe you could be in Takwa or in the western region, you could be maybe in Kintampo or somewhere. If you are located outside that
the
capital, you are giving tax concession up to 50% of the corporate income tax. So effectively,
50 of the 25.
Of the 25. So you are paying 12.5% corporate income tax for that. And so you realize that is also to spread that you don't just go to only the regional capitals. Let's push people outside so that we can spread the development all across.
Okay, so I would imagine that unlike the tax relief for individuals that we discussed yesterday, for these business owners, they are aware and are indeed taking advantage of these
they should
tax
be
exemptions.
aware. They should be aware. Ideally, they should be. So if you are into any of the activities I mentioned and then you are not taking advantage of that, then you have to. It's supposed to encourage you to do well at your business. So these companies, I'm pretty sure, should have a fair idea of the tax incentives and the location savings that are available to them under our various tax laws.
Okay, and I believe just like with the individual ones as well, it's yearly.
Yes.
It's a yearly
thing. So when you pay your corporate income tax, normally for businesses, your the year of assessment is from 1st January to 31st December. But your basis period, that is the period within which we'll calculate for you to pay taxes, is your normal accounting year. So 12 months after you start operation, that is how we calculate it, and then you pay tax accordingly.
Right. Now, you've just mentioned that they should know, or business owners should be aware. But for those who are not, maybe after hearing you speak this morning, can they claim for previous years? Because this is a lot of money.
It's a lot of money.
Do a lot of good for their businesses.
It's a lot of money, but there's always a limit as to how far you can go. Because effectively, if you overpaid your tax, as far as the corporate income tax was supposed to be 25%.
Oh, people actually overpay?
Yes, because if you're supposed to pay 12.5% and you're paying 25%, then obviously you are overpaying taxes.
Okay, in that sense. Yes. Okay.
So you could have a credit. In essence, you could have a tax credit that you
could
use
unlike the individual one where you cannot file for previous years, with this one you can if you've overpaid.
For individuals, it is not really the difficulty with individuals is that it's a relief you get if you are able to meet a particular criteria. So you produce it and then you reduce. For companies, essentially when they file their returns and they pay their tax and they've overpaid, they could have a credit they can roll over. That is also happens for individuals as well. But for the reliefs, it will be difficult to go claim them in the year in which you pass them. But for the tax incentives, it's a reduction in the rate you are paying as a tax. It's not an allowance we give you that deduct before you pay. This one, your effective tax rate is what is reduced.
Okay, so if you were not aware of this before and you're just hearing about it this morning, you can go back to your books, check, and then go and claim for all these, or it rolls over like you're saying.
No, you can't claim. There's always a limit as to how far you can go. But what you can basically do is to ask that you amend your return and then ask that they give you a credit for the taxes you were paid. But then there would always be...
When you say credit, in what form?
A credit meaning that normally you're supposed to get, if you overpay taxes, you're supposed to get the money back physically, but you don't really get that.
So what do you get?
What you get is that you get a tax credit. So if you overpay, say 100
you don't pay next year?
Next year you can use the 100 excess to knock it off.
Ah.
Yes. Okay. So that if you have 200 Ghana cedis to pay next year, you can use the 100 Ghana cedis that you already have with GRA to knock it off.
Okay, so let's say, for example, these companies, it's a company that's exempted for certain tax for, let's say, 7 years. You wait till after the 7 years before you can use that credit?
That is the difficulty, because ideally, you are supposed to get the money back. Yes, ideally. But it's difficult when money hits the consolidated fund and you're getting it out.
Right.
So normally, the best thing you always get, in practice, ideally you should get, but in practice, what you get is a credit. And so you can have the credit go on and on and on.
So if you're in the third or second year of your business, you wait till after 7 years.
Yes, basically that is what would happen.
Wait till after 4 more years.
Yes, but you see, what happens is that it is the company that does not pay the tax, not the individual employees. So if you have to pay, for instance, withholding tax of your employees, and you have a tax credit, you can use that to knock it off. So the companies are not left out in the code. Okay. If you have any other tax obligations, you're supposed to pay as a company because you're supposed to deduct it and pay. Mm-hmm. Instead of doing that, you could have the credit and knock it off. But that is something that GRA would have to approve of. So you don't just get up and start knocking it off. You have to let them know. They would normally do an audit. In practice, they will do an audit to confirm if there's any excess. And then they will tell you that you can have it as a credit and you can use it to knock off other personal or direct income tax liabilities that you have.
So a lot of what we've spoken about this morning has had to do with incentives. What about exemptions, or are they the same?
Yes, basically for the 10 years I was talking about, we can call them exemptions because it is exempt from income for that particular period. Yes, but typically when we talk about exemptions, they usually have some level of permanency. So it depends on how the tax literature uses it. It could have the same effect, but it could be different in certain respects. So, for instance,
exemption in terms of an unlimited number of years.
Yes.
Like
so, for instance, the president, the salaries, allowances, gratuity, and pensions of the president of Ghana are exempt from income tax. Okay. So long as he's president, he doesn't pay any income, any tax on his income flowing from his office as a president. Okay. And also, and that's under Section 10. So that is a typical exemption for the period in which he's president. He doesn't pay anything. But for incentives, they usually have what we call sunset clauses. After a period, they sunset. So you revert back to the normal order, or you revert back to a not so favorable order. Okay. Yeah. So that is really hard. But the effect can be the same. Okay. Incentives, reliefs, exemptions, the effect can be the same. But it depends on how it is used and in what context it is particular.
Okay. Is there anything to do with incentives that we haven't mentioned?
Well, for yesterday when we're talking about, not business, but when we're talking about individuals, I made mention of the fact that you have to be a resident tax individual before you can earn that. Under that, there are 4 categories for determining who is a resident person for tax purposes in Ghana. We can group the individuals into 4 categories. So, under Section 160 of Act 592, you realize that the first category are citizens of Ghana. If you are a citizen of Ghana, you are deemed to be resident for tax purposes. That means that you can claim the benefits under Section 39, 57, and 60 of the Act. But it does not include citizens who have permanent homes outside Ghana for the whole year of assessment. So our relatives and our friends who are citizens of Ghana but find themselves living outside working, they are not deemed to be resident for tax purposes.
You actually have to be living in that jurisdiction.
Yes, you have to be, have what we call permanent home. Permanent home, as the literature tells us, has a place where someone habitually resides. So it has to be a habitual, have some element of permanency before you can get that. The second category deals with any individual who is present in Ghana for 183 days, that is effectively 6 months, within any 12-month period that either begins or ends in the year of assessment. And I'll explain that. For instance, if a foreigner comes to Ghana, say in October 2014, the law says we will count 12 months, which will end maybe by the end of September 2015.
Right.
Within that period, if that foreigner spends 183 days or more in Ghana.
Continuously?
No, not continuously. You can go and come back. But within that 12-month period, if you spend 183 days in Ghana, you are deemed to be resident for tax purposes.
Wow.
So after that, then you can claim the reliefs under Section 13, the personal reliefs, the life insurance, and then pension contributions. Then the third category has to deal with employees or officials of the government of Ghana who are posted abroad during the year of assessment. So you could have high commissioners, you could have those in the foreign service who go outside. They are still deemed to be resident for tax purposes. So they pay their income taxes in Ghana. They are entitled to all
tax
the
reliefs.
And the last category deals with citizens who have a permanent home in Ghana. So you live, you work in Ghana, but you are temporarily away for a period, a continuous period not exceeding 365 days. What that last category effectively means is that if you're a citizen of Ghana and you maintain a permanent home in Ghana and you are away just for a short period within the year of assessment, you are still a resident individual for tax purposes. So you can claim it.
And that period can be as long as a year?
Yes, it can be as long as a year. But interestingly, the year of assessment for an individual, the basis period is from 1st January to 31st December. So if it says not exceeding 365 days, it means effectively you are not out of it. So if you are a citizen of Ghana and you maintain a permanent home in Ghana, you are deemed to be resident for tax purposes, and you can enjoy the personal reliefs, you can enjoy the life insurance contributions, and
all the reliefs that come with it.
Reliefs that come under that.
Thank you so much for your time this morning. I have definitely learned a lot. I'm sure our viewers have as well. William Kofi Owusu-Dimitia is an expert tax attorney, so if you have any issues, you can see him. Thank you once again for your time. This has been The Chamber here, live on NewDay, but please don't go too far.